All right, all right. Having a little technical difficulty here, trying to get everything pulled together. And we're getting there. We're getting there. Didn't want to delay too much longer. So see if we can get everything pulled up here and going. And at least we're here and you're not wondering where I am. So just expecting a little trouble along the way. Been working on it for the last 10 minutes to try and get things up and going. So here we go. Let's see if we can make it work this time. How's that? Well, there's some charts showing up. So I guess that's a positive thing. And I apologize for having some troubles. Having a little trouble here once in a while. That kind of thing that happens. Okay, we all know that I'm a newbie at this. And so trying to figure out all of these controls. That's all it is. That's all it is. It's just me trying to figure out all the controls. All right. I need to give a warning again, and I apologize. Sorry for this. Nothing else I can do about it. I've tried and tried, but there's nothing I can do about it. You have to realize, all right, that there's lots of scammers out there who find guys like me and pretend that they are me. All right. The scammers have discovered me. Beware. They're pretending to be me. All right. So be careful. Had somebody else fall for the scam. Fraud alert. I will never call you on the phone, send you an email or private message, you asking you to invest, trade, or send me money. All right. I don't do that. I don't trade other people's money. I'm not telling you what to do with your money. I'm not asking you to send me money. Don't do that. All right. I do not trade other people's money for them. If you don't see me face to face saying, hey, and the only thing I'm going to ask you to send me money for is Pit News Magazine. All right. And you can get it for $20 a year. And so if anybody tells you to give you more than $20 a year, it ain't me. All right. I do not trade other people's money for them. I will never ask you to send me money so I can trade or invest for you. I will never contact you with a cryptocurrency trade recommendation. All right. Ain't me. Don't do it. Don't fall for it. They're out there. They're pretending to be me. They've got fake Facebook pages, and they've got fake YouTube. Well, I haven't seen a YouTube page, a YouTube channel, fake YouTube channel, but they got a TikTok is what I meant to say. Fake TikTok. So fake TikTok and fake Facebook, all on me, pretending to be me to try and get people to send them money. All right. So please be mindful. Don't fall for that BS. All right. So there is that. Let's see. Let's get back to where we're at here. Sorry, I'm a little flustered. Had that struggle going on. So here's what I will ask you for. I'll tell you, Pit News Magazine, you can get it. It's $20 if you use this code 50% off. All right. You can listen to the articles. You can read the articles. You can watch the articles. It's a continuation of my book. All right. Those of you who are familiar with my book, it's the manual to the class. So at some point you have to stop writing the book, right, and get it published, but then you're not done telling everybody everything you want to tell them. So I have a magazine where I do that with. And so each month articles come out and we highlight new things that should have been in the manual, but we can't put them all in the manual. So here's new stuff. So that's what this is. It's a continuation of current issues that we're talking about in the magazine, and that's what Pit News Magazine is. So that's the only thing I'll ask you for money for right there, to help me get that thing published and pay a bunch of the people who help make that happen. So that is the name of the game on that one. All right, and that's it. That's it. University might ask you for money to come and attend my class, but that's not me. All right. They do give me a nickel or two so that I can buy gas to get back and forth from home to the university, but that's about it. And all right, what are we doing here today? Let's get started. Let's rock and roll. We're going to talk a little bit about the differences between the futures market and the stock market. Last night in class, we had a wonderful class. We have a big class this time. It's great to have everybody there. See a bunch of you guys here. It's nice to see some of you guys coming in and saying hello. John, it's nice to see you. Gary, it's nice to have you. Alex, great to see you. We got Jeff coming in. We got Larry coming in. We got Alex coming in. Got Bruce there. And Bruce, you're way down the list, man. You're usually at the top. But we got Bruce down in here. We got Barbara in here. It's great to see you guys all putting up your names and saying hello. We got more than what posted their names up in here. So if you guys want to post your names and say hello, we'll make you famous. All right. It's great to see everybody here. So we're going to talk a little bit. We're going to kind of follow through with the conversation that we started last night in class. And one of the biggest questions we had, a lot of people, class ended and I dismissed everybody, and then half the class stayed and asked some more questions. So I think that some of the questions they asked were really valid questions, and so I wanted to cover a couple of those things here first thing, just to kind of get everybody caught up. So we were talking about we did a little bit of combination. We did some stock trading. We did some stock. We talked a little bit about the stocks and the pattern day trading rules. And when you're trading the stock market, you have to have $25,000 in your account at a minimum, because if you fall one penny underneath 25,000 and you make a day trade, then they're going to freeze your account for 90 days. All right. They freeze you right out. You can't make any more trades. Now you can get out of trades. You just can't get back into any new ones. All right. So no trading for 90 days, 3 months. You're locked out of your account if you try to day trade more than 4 times in a week. All right. So that's how that works. That's the pattern day trading rules, and they're trying to protect you from yourself. And then we switched over. Now we talked about some strategies. I taught you my secret morning strategy bell strategy, and it's a really cool way of trading, and it's the way I like to trade the stock market when I'm day trading. All right, and we'll go back and we'll review that today. We're going to go take a look at the markets. We kind of looked at them from what we saw yesterday in hindsight, but now we're going to go, well, I guess it's still hindsight, but we're going to go look at that, and we'll do a little day trading because it's the end of the market. This is usually scalping day because we're at the very last hour of the market. So we only have 1 hour to trade. And so you can't really get into a long-term trend, a 3-hour, 4-hour long trend, when all you're trading is the last hour of the day. So this is more scalping. It's trying to just capture some small trends. And yesterday, or on Monday when we did it, we just kind of went hog wild, started buying and selling and playing around and doing lots of crazy stuff, mostly just to demonstrate the software, demonstrate the markets, talk a little bit about it, help you get involved, see if we couldn't make a little bit of money. But we ended up going hog wild crazy and playing too much, and ended up losing a bunch of money instead. But that can happen. So I think that's a good lesson on what not to do. I think that's also something very valuable for you to do. But I also wanted to make sure you understand that you can do that in the software. When you're learning the software, whatever platform it is that you're learning and practicing on, you need to feel comfortable being able to pull the trigger, place orders, try everything out, draw pictures, place lots of orders, see what happens. All right. Because you just need to get comfortable and familiar. A lot of people are a little too timid, a little bit too shy to buy and sell and pull triggers and do things. And they're scared they're going to lose money in the demo account. And then somebody will laugh at them when they need to ask for more money. Nobody laughs at you when you ask for more money, because nobody can see your account. They don't know how much you lost. They don't know what you did. All you do is you write into the office and you say, I need put $50,000 in my account, and they'll put 50,000 in there. They don't know if you've already got 50 or 100 or 250,000 in there, and then you're asking for 50,000 more because you want to run a different strategy or whatever. They don't have any clue. They don't even care. It's just a secretarial thing. They just come in, oh, Land Turner needs 50,000 in his demo account. Land Turner 50,000 demo account, enter, and they're on to the next thing. Nobody's laughing at you. Nobody's thinking you're silly. A lot of people are concerned somebody's watching them. Nobody can see what you're doing. It's all you. Is private, okay? 100% private. Real money's all private. The only people who can see your real money is the brokers at the trade desk. So, and they don't care. They see thousands and thousands they can't remember from 1 minute to the next what's going on with other accounts. So nobody cares, all right? Don't feel embarrassed. And that's another thing. Oftentimes we feel like we're trading for somebody else. Don't trade, don't practice, don't do anything for anybody else. You do it, it's all for you. You're the only one who knows what's going on, all right? So when you come in here and we're looking at these markets and you're trading and you're practicing, you're like, I wonder what that would happen if I push that button right now. Just do it. You can't break the software. You can't hurt it. And if you lose $10,000 trying something, hey, that was a great lesson, right? That was a great lesson, a good thing to learn so that you don't do that with real money. And that's what we're really here for when we're in the demo account, in the lab, and in the classes. It's to push all the buttons and see what they do, practice, and then we're going to fine tune our trading strategy as we go further into the lessons. We're going to use different tools. We're going to use more strategic order types. We're going to use trailing entries. We're going to do all kinds of really neat stuff other than just hitting buy, sell, buy, sell, buy, sell. That's just the most simplest random way of getting into the market. Oh, I think the market's going to go up, I'll hit buy. Oh, I think the market's going to go down, I'll hit sell. We try to be a little bit more strategic about it. I oftentimes call it, we want to be a swag. all right, about our trading. Nobody knows what the market's going to do. All right. So if you just randomly jump in and out based on your own personal feelings, that's what I call a WAG, a wild ass guess. So everything we do in these markets is a wild ass guess because nobody knows really what the markets are going to do. So I like it to be as scientific as we possibly can, or a swag, SWAG. So all of our trades, we want them to be a swag. All right. Not just a wag, but a swag, scientific wild ass guess. We want our trades to be as scientific as we possibly can, but beyond that, it's a wild ass guess because nobody really knows what the market's going to do. The market can do anything it wants to do. Just because you draw a trend line in there doesn't mean it needs to respect it. Just because you put a Fibonacci ruler on there doesn't mean it has to go back to the delta cone of probability. Just because you put an Elliott wave in there and it says the 3-drive pattern doesn't mean it can't go 4, 5, 6, 7, 8, 9, 10. It certainly can. And just because, you know, we draw our mathematical models and our indicators in there and we get a buy signal from our favorite indicator doesn't mean it's going to go up. Okay, so the market does whatever it wants. All we can do is put the odds in our favor the very best we can possibly do. And that's what all of these little patterns, all of these little mathematical models, all these little dots on the screen, all these indicators, that's all they're for, to help you try and put the odds in your favor just a little bit better than the next guy, so that if the market does go, you can be there and get an optimal point of entry and see if you can't catch a trend and make some money. Okay. So that is trading. That's really all it is. And so we can use some of these tools to help us automate that to a point where it will automatically trail, because we get tired. You know, we're human. And so we have a problem sometimes executing well. So we can just set up the software to click a button and it'll execute for us. And it's really good at executing. Okay. But what it's not good at is knowing when to execute. I mean, it reads the charts and all the indicators and all the things the same way you do. But the best thing for you to do is to be the one who decides when the market's going to go, and you click the button and then that turns it on and makes it trade. Now, Track and Trade in particular, this software that we're using right here, this software has a lot of different automated features built into it for day trading. All right. It's very much designed for day traders. And I'll show you just a little bit about why that is. We have this control panel over here on the right-hand side, and everything is in the control panel. And the reason is because me and the traders back in Chicago, when we were designing this software, hate things popping up in front of the charts that makes it so you can't see what's going on. And also so that you can't see what the changes are that you're making on the fly. You want to be able to see the changes on the fly. So for example, I'll give you an example. If you come in here and you want to change let's bring this full screen. If you want to change the yellow lights, all right, the little yellow dots in here, let's break this up, make this a little larger so you can see it better. But let's say you want to change how sensitive the little yellow dots are. You come over here to your preferences tab. Now, most software programs that are out on the market, you'll click a button that says, oh, a little air gear icon or something up there that's going to say, okay, I want to change that. And so it'll pop a big box up in front of the chart, and then you can't see what's going on the chart. It just covered up the chart. And then you make your changes in the little dialog box that's covering up the chart, and then you hit okay, and then the changes suddenly happen on the screen. And then you're like, well, I didn't like those changes. I want to change it just a little bit more aggressive. So then you have to go to the little icon, pop up the box, cover up the screen. The whole time you can't see what the market's doing. You're trying to sit there and make changes to the yellow dots. So you change the numbers, you hit okay, and then boom, they change. And then you're like, oh, that's not really what I want either. And so after trial and error about 10 times, you finally get it to where you want. But by then the market's gone. And now you have to say, well, now I have to retune it again. So that's really frustrating for somebody who's working off a market that's going fast. That's no big deal if you're working on a daily chart or a weekly chart or a monthly chart. Who cares, right? You got a month before you have to worry about where the next dot is. But when you're day trading, you worry about those things. Oh, crap, that dot is not where I want it to be. I want it to be a little bit more tight. And by the time you get it a little tighter, your opportunity's gone. So this has been a big problem for a lot of traders, and we've solved that problem here, because what we can do is we can come in, let's say the ATR, these are the settings for the ATR, right? The yellow dots. And so we can come in here and we can move these things. We can make changes to the yellow dots without covering up the chart in the first place. That's a big deal. believe it or not. And then the other deal is that you can change them on the fly. Watch this. I can make them move up and down right on the chart and put them right where I want them. While the chart is moving in front of my face, right? I can put it right. I can tune that baby in right there, right now. I don't have to sit there and hit no damn dialog boxes. Okay, look, see what it is. Nope, not what I wanted. Go back, change it again. Is that what I wanted? No, it's not what I wanted. And we do that with almost every single tool in the whole software. And you might think, that's no big deal. But when you're trading and you're day trading and you get good and proficient at this, it's a big deal. All right. That's a big deal. Just not having dialog boxes pop up. Now, you can't solve all the problems because, we're working in an operating system called what? Windows. They call it Windows for a reason because they like to pop up all these little windows. And there's sometimes where you just have to do it. Microsoft doesn't give you another choice. So here we do have a window that pops up in front of the chart. It's very frustrating. It does it, but it's the only way you can do it. But this one at least is not one that you're going to be using very often. You don't change this very much, but it is a box that pops up in front of the chart. And so Windows is designed to pop boxes up in front of the chart. So there's places in the software where that's just going to have to happen. You can't do it otherwise. You got little places like this. Again, you're going to have little windows that pop up in front of the charts, but we try to minimize that the very best we can, especially with tools that you're going to be using when you're trading. All right. So indicators in particular are a big one for that. All right. So that's one thing that you want to watch for in your trading platforms, whichever trading platform you're going to buy and work off of. So those things are important, believe it or not. Okay, the next thing that I wanted to talk to you about was another question that I had about, and the software that we're using right here, just to drive the point home real quick, is Track and Trade. It's Track and Trade. We use the stocks version and the futures version. The futures version, there is no pattern day trading rules. So no $25,000 minimum, no freezing your account for 90 days. That just simply doesn't happen. It's not even possible. They don't do it at all in the Chicago exchanges on the futures market. That's just a New York City thing. And that's just on the stocks version. So this is where I have the software. This is the software I'm using. And so that's, if you like what I'm doing here and you see, and you think that's really cool stuff, you can go get it. It's at trackandtrade.com. Download it. I'll help you. If you want to use, if you already have software that you use and that you love, well, just stick with that. You don't need to go get something new unless it seems to be much better for your purposes in which you're trying to accomplish. So that's up to you. You can definitely try it, get 2 weeks for free. And then if after that you want it, then you can go ahead and pay the subscription fee and get rocking and rolling. But nonetheless, if you've already got software you love, stick with it, right? So it just depends on whether you want to move up to a platform that was designed specifically for day trading. And that's what this was. All right, so there we go. And I'm using the ATR, the little yellow dots. You can see I've just got them here with an ATR period of 1 and a stop factor of 1. That's just kind of the default setting. Excuse me. And then we're going to just kind of go, oh, my goodness, hold on a second. I got to get some water here. Well, I ran out of water. All right. So we're going to be good. Just a little bit there, but we'll be all right now. All right. So here we go. Let's go in. And the other question that we had, wow, look at the market go. That's really nice. We should be trading instead of lecturing. Wow. We would have been happy with that trend, wouldn't we? We might not have got in the first one because we didn't know it was going to do that because they're just going sideways. And then it started to rally and it gives you this little pullback right in here. That's where you're like, ooh, maybe it's going to go again. And certainly did. So that's kind of that little ABC pattern. That would have been a nice run. Just for fun, how much money would that have been? Let's say we got in at the red line, got out at the yellow dot. So from this yellow arrow to that yellow arrow would have been a $375 profit on a $1,000 investment. That's pretty good money, $375 on a $1,000 investment. All right, so let's just say it went from here. Let's say we just got in right here on this rally and got out. That would have been a $200 profit on a $1,000 margin. Okay, so here's the part that I want to talk to you about. Now, last night after the class was over, some guys asked the questions about how the buckets work. And I call them buckets, all right? So if you think about it, let's come in here and look at the key. So in the futures market, we have an issue. In the stock market, it's a lot easier because everything is ranked in dollars and pennies, right? And we all understand pennies and dollars. We've been doing that ever since penny candy at the grocery store, right? So we go and buy penny candy. We understand 1 penny. We understand $1. We understand that if we're going to buy something in a stock, it's all based in pennies and dollars. But in this in the futures market, not everything is pennies and dollars. Now we have pennies and dollars because we have the Dow, the Russell, we have some stock indexes, and they're based in dollars. But what about things like crude oil and corn and wheat and soybeans and orange juice and oil and unleaded gasoline? These things are all measured in different methods. So for example, crude oil is done in gallons, and it's done in 55-gallon drums. All right, so how many 55-gallon drums are there in a contract? All right, in a quantity one. And then of course you got corn, which is measured in bushels. You got wheat that's measured in bushels. You got gold that's measured in ounces. So how do you trade these different markets that are all these different ways of measuring? So because of that, we have to complicate things a little bit, which actually simplifies things a little bit, but it seems a little complicated because of all these different measurements. And so we need to come in and understand how this is done. So what they do, or what we do here at the futures market, is we create buckets. All right. And think about your buckets as different sized buckets. And we have big buckets, little buckets, and tiny buckets. All right. So the tiny bucket is called a micro. The middle bucket is called a mini, and the big bucket is called a just a standard contract. All right. So this is the standard, this is the mini, and this is the micro. So if you want to trade a smaller dollar amount, a smaller investment. So for example, if you're going to trade in the micro, you might have 1,000 or 100, let's say 100 bushels of corn. All right. And that's going to cost you to put on one quantity one position. This is quantity one. And let's say it's going to be, and I'm not going to sit here and draw all these out, write all these out, but this is quantity one, and it's a micro, and it's going to cost you, let's say $100 to put this on. All right. That's your margin amount. Okay. And we're going to talk about margin too a little bit. So this is the way this works. So this one, you have a micro count, you have 100 bushels in the micro, and of course it's corn, and it's a quantity one, and it gives you $100 to put that on. Well, if you're going to do the next one, it's going to be basically the same idea, only we're going to increase this. Now, instead of having 100 bushels of corn, we're going to have 1,000 bushels of corn. All right. And it's still quantity one, but instead of $100, it's going to cost you $1,000 to put it on. All right. So that's how we do the micro versus the mini. So this is a mini, and all it is, it's a different chart. So you just open up a different chart in your charts list. So if you want the micro, you just go into your charts list, and you can see right here, they're just listed. See that? There's Euro FX mini, Euro FX micro, and Euro FX full size. So you got three listed of the Euro FX. It's just different bucket sizes. And that's how you get into the different buckets. All right. So we create buckets, and then we put things in it like gold or silver or corn or wheat, soybeans. We just have different quantities based on however you measure them. And then we take those buckets, and each bucket is a quantity of one, and we can do it with dollar amounts. So we can say with this amount of money, you can buy one bucket of gold, which is measured in this many ounces. Does that make sense? Hopefully that makes sense. So this is then 1,000. And then of course, maybe if you come over here to the big one, and then it goes up to 10,000, right? So you got 10,000 bushels of corn. It's still quantity one, and it's going to cost you $10,000 to put one on. All right. Now that's a little big for most of us, so we don't do those. So, you can come into track and trade and just turn them off. And you say, well, I'm not going to ever do a full size contract of Euro FX. So I can just turn it off. That one there, I just don't need it. So I turn it off. Now I say, okay, I got the micro and the mini, a Euro FX. I hit okay. And when I do that, I pop up here and here, and now it's gone. It's not in my drop down list. And so I don't even have to worry about the Euro FX full size in there. It's not even listed in my list anymore. Okay. So that's that little button up there, and you can just turn those off. So how's that sound? Sounds pretty good, right? So that's how we do things in the futures market. So if you want to trade the micro, which is the smaller bucket, you have to go in and just open up the small bucket. And you can look at the key, because the key is going to tell you how much money is going to require to be put up to trade the micro mini, or the mini, or the full size bucket. And it's just the different sizes that they use and how much money you're going to make or lose based on that particular size of bucket that you're trading. All right. So that's how they take something that is measured in ounces and have quantity one, and it's this many ounces is quantity one, or this many ounces, or something that's 55-gallon drums of how many barrels is it going to be. And the small one, it's, It's 10 barrels, and this one's got 50 barrels, and this one's got 1,000 barrels. Okay, so that's your different sizes, and that's how we do it, and it's makes it really nice and easy. All right, so there you go. Wow, look at this market go. We got some movers and shakers today. Let's go look at the rest of the market and see what's going on. Look at it flush, flush and flush and flushing. How did you know it was going to flush? Well, you didn't really know. You kind of see that it wasn't trending, and then suddenly it started to move. How'd you know to get in that? You didn't. You just have to kind of take your shot at some of these when you think these markets are going to go. And you can go down to smaller time frames or larger time frames. This is a range bar 6, so it's really tiny time frame. So we can bring this back, and we can come in here, and you go like this. We're going to go into a 2-minute chart. We can go into just take it out so it's not quite so difficult to see. It's not moving nearly as fast. Turn on the Heiken Ashi. I like that. See, and things start to move a little bit slower. You can even go out to a 5-minute chart if you want to, or a 15-minute chart. So here's a 15-minute chart. So you only get one price bar every 15 minutes. Now, if that's the case, this was 12 o'clock, 6, 7:30. So that was the morning. So this was the entire day from right here to here. On a 15-minute chart, it's a little bit more difficult to trade in there. That's where we use 15-minute charts. I'll do options on 15-minute charts on the S&P 500. That way we can hold those options for, all week long or for a month or something. We start them off with 15-minute charts. But for day trading, 15-minute chart might be a little bit too short. All right. But it kind of gives you the overall longer term trend so you can kind of see where the markets are at overall. We had a nice rally this morning, and then of course it plummeted and came all the way back down to where it started. So that's not good. So we can come in, and you can come in. Let's say if you look in the list, you're like, I'm just right clicking over here in the Dow Jones. Let me see if I can make this bigger. All right. So I'm just right clicking over here in the chart, and it gives you all the chart sizes. And you can see I've got range bar 6. I got a 1 minute, a 2 minute, a 15, a 25, range bar 50. And you're like, but where's my 5-minute chart, Lan? Well, I don't have one turned on. So if you want one, you come down here to these little tabs that I'm covering up. Now let's move me over here. So you see these little tabs down here. You just right click on the 15-minute, and we'll turn that 15. Oh, we've got a 1 minute. We got a 2 minute. I can change that to 5-minute right there. And if I change that to 5-minute, I hit apply. Now that 15-minute chart turns into a 5-minute chart, and there's that 15-minute chart. Okay. So I turned it into a 5-minute chart. Now each price bar represents 5 minutes. And that's what the chart looked like for the entire day on a 5-minute time frame. And you can see that you'd probably have to kind of sit here all day long, 7 hours, to kind of trade on a 5-minute chart. But that's okay. A lot of people don't mind that. And they can draw their little trend lines and have a little bit more accuracy in here, be a little bit more quiet and not worry about, so much movement in the market. The difference is that when you get in, let's say you get in at the blue light and you're going to put your stop back at the other blue light. Well, you can see on this particular market, which is the Dow, which is the Dow mini, you can see if you just put your stop back from one blue light, let's just say even back just to this yellow light right here, that's $365. So you're basically risking $365 if you're going to trade a 5-minute chart. It's a bigger chart. Markets move through bigger price and time changes. So you can come in here and say, well, I don't know if I want to put a $365 risk on. So you say, well, if I go down to a smaller time frame, you can either do that, or you can go down to a smaller chart, right? You can go down to a micro. So we come in here and we go into the Dow, and we say, I'm going to go into Dow micro, and you pull up the Dow micro. There it is. There's the Dow micro, and that's the daily chart. But now we can come down to the Dow micro, and we go into a 5-minute chart, and we got the same exact pattern, right? It's just smaller. Now, if I come in here and I draw my dollar calculator back from the blue light back to the yellow dot, that's $34, not $340. And you're like, oh, that's a little bit better. I like that better because I'm not risking $340 one price bar back. Because, if the market turns and goes against you, lower highs and lower lows, higher highs and higher lows makes a difference of whether you get in or not. And then you're not risking so much on your stop to get out if you're wrong. So now if the market goes in your favor, down it goes, that's $211. And that's not bad, but it could have been $2,110 if you'd have been in the other market. So it plays both sides of the coin. If you risk less, you make less. If you risk more, you make more. And that's why sometimes we look at the 5-minute chart and we're like, I don't really want to risk that much money, $340. But $37 isn't enough. I want to make more money. So you're like, okay, well, let's go down to a smaller time frame. So we're going to go down to, we're going to take our, not our micro, but we're going to go back up and going to open up our mini Dow. Where is it? Right there. And instead of having a 5-minute chart, we're going to take that down and we're going to go down to a 2-minute chart. Now, when we go down to a 2-minute chart, things are a little bit more aggressive, right? Smaller time frame. And so we can draw our trend lines in here still. And then when we go in on the blue light right here, and we put this in here on the yellow dot or one price bar back, it's only $185 on a 2-minute chart, where instead of $360 on a 5-minute chart. But of course, we're still closer to the market. The bars are smaller. Everything's smaller. There's a lot more bars. There's more to deal with. The markets are moving faster. It's just there's always a trade-off. Remember what I said in class. For every time there's an advantage, there's also a disadvantage. And the advantage of having smaller time frames is that you have smaller risk to reward ratios. And so you're not risking as much money because the market doesn't have to move as far before it knocks you out. But the disadvantage of that is that you got more information you got to deal with. You got a lot more price bars, you got lots more action, a lot more bars, markets moving through tinier, smaller spaces, and it's easier to get knocked out in the process of trying to get in. So you might get knocked out 2 or 3 times and you're like, well, if I would have just risked more in the first place, I wouldn't have got knocked out. But then you would have had to risk $350 on a 5-minute chart, or you can risk $185 on a 2-minute chart, and you're like, well, let's go down to a smaller time frame. Okay, let's bring that down to a 1-minute chart. Now, if we go down to a 1-minute chart, and I'm going to get rid of this big background now, we don't need it anymore. Now what happens is you say, okay, I have a lot smaller risk because all I have to do is go one price bar back. So my risk just goes from, here to here, and now it's only $90. And so now my risk is only $90. I'm looking at a 1-minute chart, but yes, now you have a lot more noise in the market. You have a lot more charts and indicators, a lot more arrows. You have a lot more you have to deal with. You have to kind of clean those out in your mind so that you can identify where you're going to put your stop, so you're not risking as much money because you got a lot more information in here. All right, you're having to deal with. So you can still draw your trend line in that same spot, but you got a lot more bars you have to deal with, a lot more indicators, a lot more arrows, and the market, moves up and down a little bit more aggressively and might stop you out only to have you turn and run. If you would have been on a 5-minute chart, you wouldn't have got stopped out on that because your stop would have been further back, but you're risking more. So if it would have turned around and gone back, you'd have lost more or given back a lot more than what you would if you got out on a 1-minute chart. So it's all macro, micro, dealing with which one you want to deal with. It's like, well, what's the right answer, Lan? Just tell me the right answer. There is no right answer. There's just lots of different right answers. They're all the right answer. There's not just one answer that's like, this is the best way and just do it this way. There's lots of ways to skin the same cat, right? So we're looking at, you'll notice that this little wedge pattern right here, right? So the market comes down, it went up through this little wedge pattern. Now this is really common to see. What we'll see that the trend itself generally is pretty smooth. And then the counter trend is choppy, 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 choppy. And then when it breaks, it's pretty smooth going down in the counter trend once again. So that's a nice little ABC pattern. We see that up here. This is A, B. And then this is kind of a flat top in here, but this is kind of the top right in here. A, B, C, and then down it went all the way down to 130.9, which is our Fibonacci golden ratio, right? And so that is a nice little ABC pattern. But you see that when we're looking at a 1-minute chart, lots more bars, lots more information, a little bit more confusing, right? And so if we go out to, again, back out to a 2-minute chart, that kind of cleans that up a little bit. Let's see if we can bring that in here a little bit so you can see it a little better. So there's that same ABC pattern. Let's get rid of some of these things. So there's that same little ABC pattern. Let's get rid of these too. But it's not quite as messy on a 2-minute chart as what you might see on a 1-minute chart. And then the same thing, if we turn that into a 5-minute chart, it's just not nearly as many bars. It's not as messy, and it's a little bit cleaner. Okay, so that's the name of the game. That's the nature of the beast. And you can come in here and you can look at all these charts at the same time. Now, what I've been doing is I've come in here and I've got the Dow open. I got 2 Dows open. I got the NASDAQ, the Russell, and the S&P. So I got 4 versions of different indexes on here. So you can come in here and create a portfolio that's just your mini Dow, right? And if you do that, when we bring that up, now we have all 4 charts represent just the Dow itself. So up in the upper left-hand corner, we have the range bar 12, which is still the Dow, same market, it's just a range bar 12. This is a range bar 6. This is a 15-minute chart, and this is a 2-minute chart. So you might line these up so they give you the different time frames. So that's a 15-minute chart. We know that's the longer term trend. So that's the entire day right there, just like we looked before. That's your entire day. And so now we can watch that trend, and then we can come up here and we can say, well, I want to have down here, I want to have this one be right now, that's the range bar 12. I'm going to change that into a 2-minute chart. All right. Or maybe you want that to be your 5-minute chart. We'll make that. Let's see, we don't have 15 here, so we're going to have to go like this, and we'll change that 15 into 5, make that a 5-minute chart, hit apply, and there we go. So now we have a 15-minute chart. I turned my 15 into a 5, and now I don't have a 15. So let's go we got to go put a 15 back in. If we're going to have all 4, right? So we got to come in here. We'll do that. We'll make this one be 15. All right, so we got 1, 2, 5, and 15. So that's good. So now we can come in here and let's change all these up. So now we got up here in the upper left-hand corner, we can make that one 15 again. All right, so we're back to being 15. So this is 15. Let's make it Heikin-Ashi. I like Heikin-Ashi. Kind of cheat codes. So, all right, there we go. Now we got what we want. So there's the 15-minute chart. This is a range bar 6, which is really tiny, right? And then this is a 2-minute chart, and then this is a 5-minute chart. So now I can see all Dow at the different rates, at the different levels. It's still all the same market. It's still the Dow. And watch what's really cool. If I come in here and trade on it, let's say I think the market's going to go down, I hit sell. You'll notice that it puts the sell order on all 4 versions of the chart because it's all the same chart, right? So the 15-minute chart, this is the 6-minute range bar 6 chart, the smallest, tiniest one. This is the 2-minute chart, and this is the 5-minute chart. So now I can see it from all points of view, and I'm just still looking at the Dow. And that's kind of a fun way to trade too. All right. So let's see, what should we do with this trade? The range bar 6, see how close the little dots are in there? Let's bring that full screen. And I'm going kind of fast, and I'm not expecting you to be able to keep up and do everything I'm doing and follow along. I just want you to be aware that the software is capable of doing it. And then when you got more time, you can sit there and play with it, and you can figure it out and make it do what you want. So let's come in here to the preferences, and you're going to say, I saw Land do that. How did he do that? I'm going to figure it out, or I'm going to go watch one of the videos, and I'm going to do it myself because that's what I want to do. So this is the yellow dots. Oh, we're getting our turnaround here. So should we put a stop in there in case it goes too far against us? Go in here and put a stop. All right, so that's in there just in case. So we want it to drop, not to go up. So we come in here, let's say we're going to adjust these ATR dots. So I'm going to come in, I'm going to click the little icon down here in the bottom right corner of the chart. And the ATR, you can say, is set at a stop factor of 0.6, which is really tight. So you can see how tight those little dots are, right? Let's say we want to loosen those up so they're not quite so close. You just scoot that up just like that. And maybe you want them way out here. In fact, that's where we got our stop. So we can say, well, that's where we're kind of trailing this down. Let's just put it there. I said, maybe I go a little bit tighter. I can bring that in, bring those dots in just a little bit tighter. Where's the right spot? Well, it's kind of like tuning in an old Ford F-150 pickup, 1972 pickup truck radio. You have to kind of just tune it in. You look at the chart, you look at the trend, you see where you want your stops to be, and you turn those dials to make those dots go where you want. And it's like, and eventually you say, oh, that's right. Sounds real good right there. And that's where you tune it into. And then that's where you run your orders at. So you say, okay, it's been doing that. So we're going to put this on ATR. And now that order is going to trail down on those yellow dots based on how we tuned it in, like an old 72 Ford pickup truck radio. All right. And that's how most indicators are. You kind of set them. Now, there's tools in the software that you can just click a button and AI will come in and go, I think the indicator should go here. Boom. And it'll do that for you. But I'm kind of a hands-on guy. I kind of like to tune them in myself. I like to put them where I think they should go. All right. So that's how you do it. All right, we got stopped out. They came back, touched our yellow dots. And so there we go. That's the name of the game. So now we can come back and watch our 4 different versions. We got the 15-minute up there. We got the range bar 6 here, which is the tiniest time frame. We got the 2-minute down here. We got the 5-minute down here. If we look at this chart, we say, hey, I think that it's still going to go down. I'm looking at that 2-minute chart saying, I'm still in a downtrend on the 2-minute chart. The 5-minute chart still looks like a downtrend. We're in an obvious big downtrend on the 15-minute chart, but the range bar 6 up here, it's going back up. Now, it could be an early turnaround, or it could just be a little minor pullback against the overall longer term trend. So if it gives me the opportunity to take a short position here, I might just take another short position up here and then put my stop in and take a small risk. And just giving you an example, this is how you can read these different charts and say, well, one chart might do one thing or another, but the tiniest chart is going to be, the most jumpy. It's going to be all over the place. And so you might not want to trade on it. You might just want to watch it for the turnaround points. Okay. So you might want to trade down here on the 2-minute chart or trade down here on the 5-minute chart. So if we're going to trade on the 2-minute chart, we'd come in here. Let me exit out of this position. And we'd come in and we'd say, well, I'm going to come in and I'm going to put my order to stop. I'm going to drop it in there. There's our 15-minute bell already. Holy cow, time flies when you're having fun. And we're going to come in here and we're going to hit trail on the little yellow dots. And if you do that, notice where it's at on the range bar chart. It's way back there. Look how far back it's holding it on the range bar chart on the 2-minute chart. So it's trailing the yellow dots on the 2-minute chart. Look how far back it is on the range bar chart. Okay, so that's the differences between these different time frames that you're using when you trade on different time frames. Now, this is all the mini. This is all the mini, not the micro. There's not a micro and a mini or in a large one. This is all the mini. It's just different views, different. You just think about it like a microscope. We're looking at not a microscope. What's that other thing that you use when you burn ants? Micro something. Oh, are we even in the market? I don't think we're even in the market. We're just trailing on a trailing stop. So it'll trail for entry, I guess. If it crosses back up to the upside, we'll take a long position. So this is an open stop order for entry to the long side. That's what's going on here. All right. It'd have to go up and cross that green line to get us to go long. You're like, well, I don't want to wait for it to go all the way up there. Look, it might cross the little yellow lot here and go up. Okay, well, you can come in and change it and put it on that one, and then it'll trail and it'll go that way. On Friday's class, we're going to talk about different types of orders. And so we'll learn some of these order strategies and ways to use a more sophisticated entry and exit methods rather than just hitting and banging the buy order and banging the sell order anytime we think that we want to get in or out of the market, which is, a little bit more sophisticated way of doing it so you don't get so emotional and just bang in and bang out all the time. And that has a tendency to lose money as we exampled on Monday. All right. So now what are we doing? We're just watching the market at the 15-minute bell, getting ready to go. Okay, see on the 2-minute chart, we're trading on the 2-minute chart. That means the market have to go way up there. You're saying, well, it's crossing over right here, Lan. I might want to get in right now. You might want to get in early. Okay, well, it's a smaller risk, isn't it? So you can come in here and bang in with the micro with this order, and we'll put a stop order down underneath, down here. Maybe we put it right here. Maybe we'll put it right on the yellow dots. All right, we'll come in here, right click on it, say trail ATR, and it'll get you right back out again if it crosses the yellow dots once again. But if it goes up, it'll keep going up, and then it'll make you money on the rise if it goes up. So this is how you trade on different time frames using different indicators, and we're basically using all the same indicators. We're just looking at them at with different views, right? So this is a nice indicator. You can see it's coming down red and it's turning green. So that's kind of a bullish signal. Doesn't mean the market has to go up. It's just a bullish signal. It means that it could go up, all right, because it's green. And it's green because the market started to go up, not the market's not going to go up because it's green. You have to realize that the reason it's green is because the market's going up, not because the market's not going to go up because the indicator turned green. It's the other way around. Okay. So it wouldn't have gone green if it wouldn't have been going up. Okay. We just got filled with a second order based on that 2-minute chart. So we got one trailing stop. As you see, it's trailing the little yellow dots down here. And we just got entry on the 2-minute chart down here, but you saw it fill on the range bar chart. That's kind of cool, right? I think it's cool. I mean, I think that's cool. All right. So now we got one stop right here. We need to have the yellow dots flip to the other side. It's going to take 2 minutes to get ourselves a yellow dot, and it may not even give us a yellow dot. It might just go up there, stab it with its steely little knife, its little topping tail, and turn around and flush. It does that sometimes. I hate it when it does that. So it gets you into the market, and then it turns around and goes the other way. Then you lose money. That's no fun. Nobody likes to lose money. All right. So now we just need it to go back up. Come on, baby. Rock and roll. What are we going to do to make it go up? All right, here we go. This is the best thing I can do to make it go up. You got my little poppet here. Go up, market. Go up. Put it in his right hand. It says put it in his, that's his right hand. Let's put it in his right hand and it'll make the market go up. That's his right shoulder. Do you think that works? It seems to be working a little bit. If I poke him really hard, maybe it'll go up harder, faster. That's the best I can do, guys. I don't know. Come on, go up, market. All right. Well, that was a little bit of a rush. You're up $35, Land. Get out. Take the money. Run, Land. It's going to come down. You're going to get stopped out. You're going to have a loss. Why don't you get out? You had $35. You could have got out. You had the opportunity. You could have got out. Holy cow. Look at that market bouncing all over the place. That was our 10-minute bell right there. It took one of us out, didn't it? So let's come in here. We're going to put our another stop in here. The dumb thing. We know it does that at the 10-minute bell. So we're going to come in here, edit. We'll tell it to trail on the ATR once again. Look at that thing bouncing all over the place. It's just too much energy going nowhere. Too much energy going nowhere. Well, you want to go short? Yesterday we were like, no, we're only going to take the long side, and the market flushed down a million times, and then it just went, and we kept trying to go long, right? It's not going anywhere right now. Look at how it's died over here on the 5-minute chart. Just died. So there's nothing we can do right now. We got 10 minutes till the market closes. We just sit here for a second and see what it's going to do. Come on. What makes you feel bad is if you try and get in one more time and then it doesn't go again, you lose another $100 trying it. Come on. Let's see a little rally going into the close. All right, there we go. We're going to try and see if we can't get a little rally out of this thing going into the close. Across the yellow lights on the 2-minute and across the yellow lights on the range bar. Yeah, we'll give it a little bit more room to grow here. Oh, it took us out. We'll try one more time. All right, we're going to put our stops right down here. All right, and we'll go edit and we'll trail on the ATR. On that range bar 6. That range bar 6 is tiny, isn't it? Sometimes it works really well. Sometimes a little bit too crazy. But that market's not going up. It's just bouncing all over the place. Nothing you can do when the market's not doing that. Just sit on your hands. But that's no fun when you got a whole bunch of people sitting here watching. We can at least show you how to do it. Doesn't mean it's going to work for us. Just it's the best I can do. It's the best I can do. Hit my... But you see over here on the 5-minute chart, the market's not broke out of that little trend yet. It's not broke those yellow dots yet. So you can just kind of sit on your hands and wait. But that's no fun for a class. You don't learn anything when we don't do anything. I guess what you learn is not to do anything. But we do this a lot, all right? What you do is you learn that this is what you do most of the time when you trade is just sit and watch. You know. Low down killer. Hey, there you are, man. It's nice to see you. I got to pull up your spreadsheet next time we get a chance. Low down killer did a bunch of work for us on his spreadsheets, and I wanted to pull it up when he was here so we could talk about it. It's good to see you. All right, just sit on your hands for a little while. It's flushing down again. What is this line? Oh, that's just our natural trend line, isn't it? Look at that. It's coming down on that trend line. No arrows. We got one little down arrow right here. But this market's just dead right here. Look at this little sideways market on the 5-minute chart. Come on. Nothing's fun to when you're just sitting on your hands. I can't teach anything. And there's a little triangle wedge. I guess what we learn is just not to do anything. Which is what we should have done more of on the Monday, right? Just not do as much. Just don't trade as much, and then you don't lose as much. You also don't make as much if the market takes off and runs without you. So just have to wait until it starts to move again. I don't know. I only have 5 minutes left in the bell. So we didn't get anywhere today, did we? The market, that was yesterday. So the market came in, took off, and then flushed. Today it did the same thing, took off and then flushed. So we're just losing ground right now. It's going down slower than it has been. It's been going down faster, but you can see on a 15-minute chart. This is the action of the day right here, right? Oh, this is where we were trying to trade yesterday. Or no, this is just yesterday. 2 o'clock right there. That's where the market closed. So that's yesterday's trading. This is today's trading. That's the middle of the night. Go back and look here. Look at this ugly day. Whew, that would have been. Whew, that's an ugly day. And then come back here. What's this? This is 2 a.m. 3, 4, 5, 6, 7 right here. So there's the next day right there. It had a little bit of night session stuff going on here, didn't it? Look at that, night session. All right, let's go back. See what's going on with our other charts. Nothing. We got a little wedge going on down here. We got 5 minutes. You think we can? This thing is going to drop out the bottom of the wedge. It looks like it's trying to drop out the bottom. On the 2-minute chart, that's bearish. Let's take a short position here. Doesn't mean it's going to go down. Just usually it falls out the bottom of these little wedge patterns like this. Doesn't mean it can't go out the top. It certainly can. And it doesn't mean it can't go sideways. It can do anything it wants. But we took a short. It looks like we're doing okay. We got a little bit going for us. Let's put a stop in. We'll just right here at break even just in case it comes back. All right, we need to go. Let's go add an OCO. We're going to come in here and we're going to put this limit order in here at 285. 285. So it's got to go all the way down there to get our money back. What's it doing? Come on, market. What are you doing? Oh, there we go. So I got my stop here at break even. We're just going to leave it there, see if it'll go down there and give us our money back. Get back, Itis. Okay, we got a little green bar right there. That's a good spot to bring your stop. We'll just bring it right behind that little green bar. All right. Now, you could have it back there on the yellow dot, too, if you want to. We're only short one. I only went in with one contract. That's a good spot to take another short position if we think it's going to fall again. We can take a second short. No, stopped us out. Well, gave us a little bit of our money back. Not much, but a little bit. Closed. $65. All right. Just don't overtrade. But when you're practicing in your demo account, you got to practice, right? You got to practice. You got to make sure that you know what you're doing. You practice, and it's okay. But just remember, when you're trading with real money, most of what you do is you sit around on your hands. Remember our 3 strikes, you're out. You get 3 shots at the market, and then you got to stop. Can't trade anymore. So make sure those 3 shots are your very best shots. Make sure you're drawing your trend lines, you're following along, you're looking at the different time frames, you're trying to figure out what's going on. The market down here on these little range bar 6s today is pretty jumpy. That's not always this jumpy. Sometimes it just kind of smoothly flows like a little snake, and it's really easy to trade. Those are the great days. Those are the days you love to do it. All right. And we're going to also, now don't forget, we can also trade these with options. And options, I'm not going to say it's easier, but it's not as hectic. All right. Because we trade them on a longer term time frame and we look for the markets to be in there for a longer time. So we look for a stronger trend break and then we put an option on. I'm going to teach options in about, I think 2 weeks we have an options class, and we'll just come in and we'll work the same systems, but instead of trading it with individual contracts, we'll trade them with options. All right. So we'll still be on Dow, we'll still be on S&P, we'll probably be on the S&P more because the S&P does options a lot better than the Dow. So we'll be looking at the S&P, but we can look at it in 15-minute time frames, range 6, 5s, whatever. But usually we like to trade options on, the 5 and the 15, and that's all we really need to look at when we're day trading options. And we can day trade off of those, and it smooths things out, makes it a little easier. It's not quite as crazy and hectic. Look at that. I made that little shelf right there and then flushed out the bottom, just like we thought. All right. So you can see the difference between the bars on the 2-minute chart versus the bars on the range bar 6 chart. A lot more information, a lot more opportunity to jump in and out of the market. But that's not necessarily a good thing. Pick the one you like the best. I like 2-minute. That's one of my favorites. But I also like the range bar 6, and it depends on how the market's acting. Sometimes the market's like a fickle friend, I guess you're going to call it, like a fickle friend. Sometimes it's really crazy and active and going all over the place and nuts, and sometimes it's just nice and smooth and gentle, and it's not a big problem. But this is a little nutty. This market's a little crazy here. There's the bell. We just closed out. All right, so we just lost $200, but that was, demonstrating stuff. We tried to make money, but the market just didn't go in our favor. We stabbed our puppet as much as we could, and it still didn't go in our favor. But that's how you trade. And so if the range bar 6 seems a little bit too wild and crazy for you, don't do it. Don't do it. Come down here and maybe go to the 1-minute chart. And maybe that's a little bit easier for you to deal with on the smallest time frame. And you can trade off of that one. It's not moving nearly as crazy. All right. But oftentimes the market's not moving crazy. So you want a little bit more active chart. So you can go down to a range bar chart. But you'll notice in here, I also have range bar 25s. I have range bar 12s. I have all kinds of different sizes of range bars too. So you don't have to just do those little itty bitty range bar 6s. Just keep in mind that's what you're learning, how all these things work together. And that's how you can do it. That's how you trade. Okay. All right. Let's see. I've got a Sunday school lesson for you if I can find it. I had a little technical difficulty. Again, I had a little technical difficulty this morning, or before I got started. All right. Here we go. Here's your Sunday school lesson. When it comes to trading and life in general, you need to fight like you're the third monkey on the ramp to Noah's Ark, and it's starting to rain. All right. Especially when you're trading, you have to be very mindful. You have to be very cautious, very careful. You have to be very thoughtful, and you have to watch your different indicators. You have to tune them in. You have to look at different time frames, and then be very careful about when you get into the market, and don't take big risks. And if you're not right, just get back out, take a tiny little loss so that when you do get in and the market goes in your favor, the losers can pay for the winners. And you can use multiple time frames like we talked about today, but you got to be ready to fight. Fight like you're the third monkey on Noah's Ark. All right. And it's starting to rain. That's the name of the game, because it's all out war when it comes to trading. It's all out war. Day trading. Okay. All right, guys, that's all I got for you today. And we learned about buckets, how the commodities work. Last night in class, we learned about expiring contracts. And so that was important for us to understand, that we have to be out of markets before they expire. And then we learned a little bit about the stock market. We didn't get a chance to go play at the stock market like the stock market today in this class to see how the day trades turned out. But we will do that next time, I promise. We'll focus on stock market day trading instead of futures day trading. Okay. All right. We'll do that then. We'll see you guys back here tomorrow morning. Tomorrow morning, we're going to be looking at our nasty portfolio that keeps dropping. We need it to stop dropping. We don't need it to go up. We just don't want it to fall, and it just keeps falling. So we'll deal with that and make sure some of our hedges are still on. Put some more on. I haven't looked at that portfolio since we were in there looking at it last time. So I don't tend that demo portfolio very well, because I'm kind of focused on my own real money accounts. And I apologize for that, but that's what I need to do. So, all right, guys, we will get together tomorrow morning, 8 o'clock, bright and early, Mountain Standard Time. We'll see you here with bells on. Take care.